Good morning, everyone. A very warm welcome to the Impact Analysis 50th GST Council Meeting Decisions. Indirect Tax, Indirect Tax Colloquium to July 2023, organized by VILGST and Tax Connect. I would, I would like to introduce our speaker, Mr. Vivek Jalan. Mr. Vivek Jalan is qualified CA, qualified LLM, and LLB. He is the chairperson of the Indirect Tax Core Group of the CII. Also, he is the chairperson of the Fiscal Affairs Committee of BCCNI. He is the regular speaker of various professional forums on the key areas of direct and indirect taxes. During the session, please put your video and microphone off. If anyone has any query, please write in the chat box. We will answer all your queries at the end of the session. Now we request our speaker Vivek sir to take the session forward. Over to you, Vivek sir.
Thank you, Moshmi. Am I audible?
Yeah.
Yeah, Vivek.
Okay. Good morning to all, and thank you for joining. Samir has also joined.
Yeah, I'm here.
Samir, opening remarks from you before I continue.
Yeah. Good morning, Vivek, and good morning to all the participants. We welcome you to this 18th Indirect Tax Colloquium on specifically we are talking about 50th GST Council Meeting Impact Analysis. Apparently, this yesterday meeting was expected to be to make a lot of changes, and in line with that there were some expected changes and there were some not so expected. So it was overall a meeting which saw a lot of decisions which after a long time the council has taken so many decisions in one meeting. So it's very important and uh, that we go through each decisions, and Vivek will take us through with in detail. So over to you, Vivek. We will have some small Q&A session in the end of it, in the end of the presentation. So you can ask your queries at the end of the session by unmuting yourself. So Vivek we can also have some questions in chat. So Vivek, over to you for the sessions.
Thank you, Samir. Am I audible?
Yes.
Yeah.
Yes.
So, thank you, Samir, and thank you to all the participants for joining early in the morning for this session on the analysis of 50th GST Council meeting, which ended very late yesterday. Press conference happened at 8 and almost around 10 o'clock. After waiting for long, we got the press release. And as we go along, we will discuss the in depth all the recommendations of the GST Council meeting which happened. And as Samir said, that there was many recommendations from the press conference which happened just post the GST Council meeting. We thought that there would not be many changes, but we saw that there were changes, and some of them were very welcome changes. Again, contrary to the press conference, which created a kind of negative environment, saying that gaming would be under GST, face value, bet value would be under GST, etc. So we'll analyze all of these changes, and as we go along, participants would keep on joining, but As always, we will start sharp on time. Okay, so I have made a list, and as you can see, a list on the agenda to be discussed over the next 1.5 hours. There are 23 items. This press release we have divided into 23 parts, and some of which you can see are very critical, and that is how we will discuss in the, since we may not be able to cover everything a lot in depth, the PPT of course will be shared with you and you can go through at your own pace. But the analysis over here, we would do most critical ones first, and wherein many companies and taxes have already been getting notices in those areas, and what is the resolution which the GST Council has recommended. So to start with, directors services. And yes, before starting, as Samir said, please keep on typing your questions in the chat box, Q&A box, and we would answer all the questions at the end of the presentation. If I find something in the chat box during my presentation which would complement the presentation, I would take it up during the webinar also. So first of all, directors services. We all know that as per serial number 6 of notification 13/2017 CGST rate on RCM on services, directors services to companies would be liable to be taxed under reverse charge under GST, and the company needs to pay the taxes under reverse charge. The question was whether, what about the other services provided by directors other than the directors sitting fees? Like we all know that in most companies, directors provide their own owned accommodation as well as office premises to the companies, where the companies pay a rent to the directors. The question was whether this would be taxed under GST, under RCM. Then consulting services provided by certain independent directors as professionals, would that be taxed under RCM? Salary paid to directors, would that be taxed under RCM? Lot of notices have also flown pre 18th of July 2022 and post that. So now the GST Council in one para has recommended that the renting of immovable property, which covers both residential as well as non-residential or commercial property rented by directors to the companies, that would not be taxed as director services under serial number 6 of notification 13/2017 CGST rate, and the same would be clarified. You can see on your screen, we have for you serial number 6, which talks about services supplied by a director of a company to the company. Now, let us take it one by one. So, on 18th of July 2022, serial number 5AA was also introduced in this RCM notification, wherein renting of residential premises provided to a registered person would be taxable under RCM in the hands of the registered person. So now, after 18th of July 2022, residential premises provided by directors to the companies would not be taxed under serial number 6, but would be taxed under serial number 5AA. Before 18th of July 2022, when the renting of residential premises service was exempt, that would be not taxed under GST at all, even not taxed under serial number 6 of 13/2017 CGST rate. What about commercial properties provided by directors to the companies? That would be taxed as usual on forward charge basis. That is, the directors will charge tax to the companies when they are providing this commercial properties to companies on rent, in case the threshold limit of 20 lakh rupees is breached by the directors. Now the question is, what about consultancy services provided by directors in their professional capacity other than as directors to the companies? That would continue to be taxed under forward charge basis. Now again the question, a far-flung question, is what about the salary paid to the directors? Salary to the directors, there is no question of RCM, because salary paid by the company to the employee, that is the director, would be outside GST under Schedule 3 of the CGST Act, right? So this has to be taken into account, all of this impact analysis, what we have done on this recommendation, and accordingly the industry should ready itself. The good thing is that the earlier notices before 18th of July 2022 in this regard on RCM for the body corporates, that would be dropped after the issuance of the clarification or explanation to the notification, as the case might be. Next, very important and long awaited clarification is expected to come. ISD versus cross charge. Now, three important points in this recommendation, which is highlighted on your screen, right? Number one, for the earlier periods before the circular is issued as per the recommendation of the council. So earlier periods, both would be acceptable, ISD or RS cross charge. For third party input tax credit distribution, let us understand with an example, because for impact analysis example is important. For example, you are a multi-state registered taxpayer, your HO is in Karnataka, and you have your branches in Maharashtra, Punjab, Madhya Pradesh, Tamil Nadu and West Bengal. So your statutory auditor is providing you a bill in Karnataka only. Now, this statutory auditor's bills ITC you are taking in Karnataka, and thereafter from Karnataka you are cross charging to the other states. So for the past period, right, there would be no more confusion. Both, even if you have routed it through ISD or you have cross charged, both would be equally acceptable. So all the past notices, we are dealing with notices which with this ISD versus cross charge, we have even represented before the officers that, see, we are ready to now route it through ISD, no problem, because time barring period is not there in ISD also. But what about the interest? So there they have no answer. Now, possibly after the issuance of this circular, those notices would be resolved and put to rest. Now, what about the future? Friends, for these common services received from third parties, always our recommendation has been that it must be routed through ISD mechanism, and it seems accordingly the circular would clarify that wherever third party services are there, then you have to route it through ISD mechanism. Point number 3 in this point. What about internally generated services? Now, what are internally generated services? Services, for example, of a CFO to the company. Again, in my example, in this Karnataka HO company, the CFO sits in Karnataka and Karnataka absorbs its salary cost. However, the CFO renders services to other branches also, and the salary is so distributed to the other branches. The question was whether this would be considered to be as a service from the HO to the other branches or not. Now, this was a double-edged sword. We have handled notices in both respects. First, in case you do not cross-charge, then Karnataka GST office comes to you and tells you, gentlemen, why have you not cross-charged? It is a service under Schedule 1, read with Section 7. If you cross-charge, then the recipient state, say Maharashtra, that of
Voice is not coming.
Vivek, we can't hear you.
sound is not coming.
Now it is coming. Yeah.
Now is it coming?
Yeah. It is fine now.
Oh, okay. So where was the last you heard me?
Yeah, we are talking about uh, say authorities in Maharashtra.
Okay. So this cross charge,
Yes.
employees cross charge, right?
Yes.
So now the authorities in Maharashtra branch, they come up and say that, gentlemen, I will not allow you this ITC because the amount is not liable to be cross charged at all, right? So now, after the issuance of this circular, apropos the recommendation of the council, it would be clear whether to cross charge or not. What is the value which needs to be cross charged? What are the services which need to be cross charged? Many of the authorities, like in Tamil Nadu, we have contested, even after provision to Rule 28, which clearly says that in case of services or goods provided from the one branch to other branch, the valuation cannot be disputed. Even the value is being disputed. Okay, why this value is being cross-charged? Why not this value? All of this would possibly be put to rest after this issuance of this circular apropos the council meeting. So, how should trade and industry be ready? We should, in case many of the companies, they have not even taken ISD registration. We have always recommended that HO should take ISD registration. So for future purposes, ISD registration should be taken for distribution of common credits and evaluation of internally generated services, that as per the circular's clarification, that should be ready, and prospectively at least the systems should be put in place. Next, again, very, very critical.
automobile industry, electronics industry, electricals industry, mobile phones, so many companies. Warranty is a business practice. It is the lifeblood of business of many industries. Let us take the example of mobile phones. Just nothing in particular, but just to understand the impact of this recommendation. So what was the issue? For example, you purchase a mobile phone. There is a warranty period of 5 years. However, before 5 years, say in third year, your mobile phone was seen there was a manufacturing defect. You go to a dealer and the dealer finds that yes, there is a defect and he provides you a new mobile phone, or he replaces the motherboard of your mobile phone free of cost because it is under warranty. The questions which were asked by field formations: number one, the supply of this mobile phone or motherboard, that is the part, free of cost by the OEM to the dealer and thereafter by the dealer to the customer, would that be liable to outward GST as per section 7 subsection 1 clause C, read with entry number 2 to schedule 1 of the CGST Act. So the contest of the taxpayers was, gentlemen, it is not a matter of 7.1c, it is a matter of 7.1a, because the cost of the mobile phone replaced under warranty or the cost of the spare part, that was already included in the original mobile phone or the original product which was supplied. The next issue was that, okay, outward I understand, but then this is a free supply, and hence under section 17.5, the ITC should be reverse read with rule 42 because it is a free supply. Well, here again, the same explanation that it is not a free supply. The cost of this supply or the spare part, that was included in the cost of the original supply, and it is not something new. It was always treated accordingly even under the Central Excise Law, section 4. However, a judgment was held by the Honorable Apex Court on 15th of May 2023 in the case of Tata Motors, wherein the Honorable Court held that when the OEM in this kind of a warranty supply actually issues a credit note to the dealer, so he is issuing the warranty or replacing the warranty supply to the customer, then this credit note would be considered as a consideration and liable to sales tax or VAT, as the case might be. There are other two mechanisms of a warranty supply. One is through delivery Jalan by the OEM to the dealer and thereafter to the customer, and one is by the dealer providing a purchase invoice to the OEM. These two mechanisms the Honorable Apex Court has not ruled in this judgment. The Honorable GST Council has, in the press release, in unequivocal terms, stated that warranty supply of goods or services that would not be taxed under GST, also no issue would be there of ITC reversal. So principally, the council is clear on this aspect that the cost of the warranty supply is included in the cost of the original product. However, the modus operandi, whether through delivery challan, credit note, or purchase sale, that needs to be seen as per the circular going ahead, and accordingly, the trade and industry, they may need to change the processes. However, it is a welcome development that at least principally the taxability has been absolutely cleared by the GST Council, as was the requirement of trade and industry since the last 6 years of GST, where various field formations have been raising this issue. Interest. We all have some notices under interest on GST in some form or the other, and the issue does not seem to rest. New issues start coming up, and the interest rate is also 18%, earlier 24% in some cases, which is a huge cost directly impacting the bottom line. So what was the issue in this case? Now, 49A section was introduced in the interim. Before and after 49A, in both cases, there were issues. Now, what happened? Let us understand before 49A. Section 49 required that CGST output could be adjusted first against CGST ITC, then against IGST. SGST would be adjusted first against SGST, then against IGST. IGST would be adjusted first against IGST, then against CGST, then against SGST. Right? Say, for example, you have taken IGST ITC wrongly, right? And even availed the IGST ITC and utilized it also. Why utilized it? Because CGST after ITC of CGST was exhausted, automatically the GST portal required that you adjust the IGST ITC. Similarly, after 49A, the IGST ITC needs to be exhausted first. So, in hindsight, what happens is maybe CGST and SGST ITC remains in your ITC ledger. You end up exhausting your IGST ITC, which was wrongly availed. And even though CGST and SGST is available as ITC, yet because you have exhausted IGST ITC, there is an application of interest by the department. Now it has been clarified, and in a very welcome clarification, which would put to rest so many notices across the country, that the input tax credit ledger has to be seen as a whole. If your ITC as per C plus X plus I is equal to or more than the ITC wrongly availed and utilized, then no interest would be charged. So this again, welcome clarification, and could be used once the circular is issued to set to rest many notices under GST. gaming and gambling. There was a lot of talk in the media before the council meeting. The council itself and many stakeholders had many meetings in this regard, and as expected, but not as expected, recommendations have been issued by the council, and this would be implemented because decisions have been taken accordingly. Let us understand a little in detail. So what is the decision? Gaming, horse racing, and casinos would come under the GST net. They were always under the GST net from January 2018. So nothing new about it. What is new about it? What was? Okay, voice is feeble. So what was disputed was the valuation of this applicability of GST. I will give you an example. Say in case of horse racing, 3 punters go to the horse racing club and put 100 rupees each on bet. 100 by A, 100 by B, and 100 by C. The horse race club totalizes it, and now it has been recommended and decided that this 300 rupees should be considered as actionable claim, and 300 would be leviable to GST at the rate of 28%. So 28% of 300, that is 54 rupees, would be a GST charge. Mr. Kapoor needs to please. I'll share the PPT again. Yeah. So this 84 rupees would be a GST charge on this 300 rupees. Thereafter, the race club would deduct its, say, 15% service charges, 45 rupees, and only the balance 171 rupees, 300 minus 84 minus 45. That would be the prize amount. So a person, he gives 100 and gets only 171 in this case. That has been decided by the GST Council. What was also litigated was whether this horse racing, casino, and gaming was fetching gambling or lottery, which are only liable to GST as actionable claims under Schedule 3. And the Honorable Karnataka High Court in the case of GamesCraft Technologies Private Limited has held that gaming is not gambling, and therefore gaming is outside the purview of GST. Now they have very clearly specified or would specify going forward that nothing doing. We will not even go into this discussion whether it is gambling or not gambling. Gaming would be a separate entry. Casino and horse racing would be a separate entry under Schedule 3, whether they are game of skill or game of chance. So all litigation done. Now again the question is whether it is prospective or retrospective. After the press conference yesterday, it seems that the government is all out to litigate this and appeal in the Supreme Court against this judgment, and this may be a retrospective levy. So please, trade and industry in this respect should prepare accordingly. Input tax credit, always a point of discussion in some form or the other in the council meeting. So what has been recommended and as a relief to trade and industry is that earlier only 17, 18 and 18, 19 2A versus 3B mismatches as per circular 183 could be resolved by taking a declaration from the supplier or chartered or cost accountant. This circular 183 and as proposed the decision of the Honorable Karnataka High Court in the case of Wipro Limited, following a justice-oriented approach, has been made applicable for all the 4 years 17, 18, 18, 19, 19, 20, 20, 21 and till 31st of December 2021. That is before section 16(2)AA or GSTR 2B was invoked. So trade and industry, what you need to do in this respect is for all the notices under 2A versus 3B, 2B versus 3B mismatch till 31st of December 2021, get the declarations from your suppliers or chartered or cost accountant as per circular 183 as the case might be. So this is a welcome recommendation. GSTR 1 versus 3B mismatches notices already have been received, right, as per rule 88C. Now 2B versus 3B mismatches notices would be received under rule 88D in DRC 1C, right? And in case one does not reply to these notices, recovery action could be launched. Therefore, it is important that 1 versus 3B, 2A versus or 2B versus 3B mismatch month on month, whatever is the mismatch, one should be ready to explain those mismatches because interest application would be there, and if not replied within time, there is a possibility of recovery action also. Now, more 1 versus 3B, more 2B versus 3B notices. Something which came out in the media and possibly it was discussed in the council, bringing metal scrap under reverse charge mechanism to be paid by the manufacturers who are the beneficiaries of that metal scrap. It has been the demand of the manufacturers since metal scrap is a very unorganized sector and liable to big time evasion, and not after GST. It has been since ages under VAT and central excise law also. So the manufacturers have a demand to reduce the rate of metal scrap from 18 to 5 so that the bandwidth for evasion is less. Bring it under reverse charge, and if you want to track the movement and the supply chain of the metal scrap, why not bring a stage-wise 0.1% GST or TDS so that metal scrap movement and supply chain can be tracked, and the manufacturers are also protected from actions due to non-compliance of these metal scrap traders. Friends, it is a fact that metal scrap, if not collected, it can be a big hazard to the environment also. So this industry cannot be allowed to be disintegrated, right? GST is only a part of this big industry and big problems. So this was discussed. So from what it seems, and possibly going forward, a solution might be coming up from the council. Goods transport agents, transporters, welcome development. Now, transporters could go under forward charge or reverse charge from 2022. But it was said that if you wanted to be under forward charge or reverse charge, every year transporter need to file a declaration. Now it is decided that nothing, not required. Transporters can file a declaration once, whether they want to be under forward or reverse charge, and thereafter only if they want to change, they can decide from 1st January, 31st of March, whether they want to be under forward or reverse charge or they want to change. They declare between 1st January to 31st March, and from the next year they can change accordingly. So if a transporter has opted for forward charge mechanism for 23-24 financial year, and if you want to get back to reverse charge, you have to file a declaration from 1st January 24 to 31st of March 2024. And from 24-25 financial year, you can get back to reverse charge mechanism. F&B services in cinema hall, lots and lots of discussion. Even the Honorable Finance Minister clarified in the press conference. The issue and decision is very simple. If you go to a cinema hall and purchase the cinema ticket, and food and beverage is a part of that cinema ticket, it is a bundle supply, then it would be considered as a supply of admission to cinema hall, and it would be taxed under 12 or 18%. If you purchase the food and beverage separately, then it would be a restaurant service and taxed at 5% accordingly. Simple solution. GST refunds, few amendments are there. After the introduction of Rule 36(4), and specifically after 1st of January 2022, when applying for refunds, many of the field officers, some of the field officer, I would say, because personally we have never faced such an issue, but some we understood that some officers were taking stand that okay, whatever is available in the 2B in the month of the refund, only that we will grant as a refund, otherwise we will not grant. Now they will clarify that whatever is available in the 2B in the current month and the previous month, the refund is eligible on that. Rule 89(4) clarified with an explanation on your screen that the FOB value of the export would only be considered, or the invoice value, whichever is less. Even in the adjusted turnover in the denominator, the export would be valued accordingly, that is FOB value or the invoice value, whichever is less. And very importantly, Rule 96A, that would be amended or circular would be coming. Rule 96 capital A. 96 capital A states that in case of goods, if the invoice is made under LUT without payment of duty for export, then the goods needs to be exported within 3 months. For services, the money needs to come within 1 year. If not so, interest needs to be levied or recovery is to be done in case export is not done or money is not received as per 96A. Now the question is that in case after 3 months export has happened or after 1 year money has been received in case of services, whether refund should be granted or no. Interest, of course, is one part of the problem. Refund, whether that can be blocked, and only because export has not happened within 3 months or money has not received within 1 year, can the export be treated as not exported at all? I think this would be clarified by the council that export remains an export, only interest liability could be there. Even after violation of the time period as per Rule 96 capital A. Well, long-awaited GST tribunal would come in 2023. Every state would get at least one or GST tribunal benches would be wherever there are high court benches to start with. Thereafter, as per the press conference, almost 50 benches have been demanded by all the states. Once this is fulfilled, thereafter further benches would come. From 1st of August 2023, the rules would be framed and the GST tribunal would see light of day soon. But when the GST tribunal does see light of day, it would start with a backlog of possibly more than 1 lakh cases. And I'm sure many of us would have pending cases. In case so, please file your cases fast with the tribunal, and even after filing your cases fast, there would certainly be a time lag in the hearing of the cases because already there is a backlog. There would be further cases going forward. Very interestingly, in the press conference, one of the reporters asked this, and it was answered that how many of the taxpayers would go for appeals is not known. So the number as of now is not known. Right? So section 109, 110 analysis, you can go through at your own pace. Annual returns, now I think industry should be ready to file annual returns within timeline. Good thing is that the relaxations in table 6, for example, you need not bifurcate between inputs and input services and other relaxations as was in 2021-22, that would continue in 22-23. Yeah, so some questions. DGGI has started issuing notices. I will come back. Yeah, I am aware of this. So, in annual return, the relaxations would continue, but those who do not file annual return in time, they would start getting notices under Form GSTR 3A. Amnesty scheme would continue for till 31st of August 2023. I think most of the people have taken the benefit of amnesty scheme, but those who have not taken the benefit, they can take the benefit till 31st of August 2023. Place of supply. Now, they have just released as the press release only one liner that section 10(1)(CA after 10(1)(C of the IGST Act would be introduced to provide for place of supply in case of unregistered customers. We can take a clue from 10(1)(C). So, for example, you have an outlet and an unregistered person comes to your outlet. He is from Orissa and you are situated in, say, Maharashtra. So, what would be the place of supply? Would it be under 10(1)(C, the place of the delivery, that is Maharashtra, or would it be the place of the recipient under 10(1)(a)? Possibly 10(1)(c)(a) would be introduced that in case of unregistered taxpayer and recipient, you cannot track as to where the consumption is happening. Therefore, the place of the delivery would be the place of supply. In our case, Maharashtra. But let us wait for the final provision to come in, and thereafter it can be further understood. Fake invoices, a lot of talk was there very recently. ED has been notified under PMLA Act to have the powers to share information about suspicious GST transaction with the GST network. This was also discussed in the council by certain state ministers. It has been clarified that this is due to FATF requirements. However, the center is very clear. Even post that, another instruction in customs was issued that in case of election spending, that would be tracked by the CBIC officers by vehicle detention, by searching places like restaurants, banquets, marriage halls, etc. The Ministry of Finance, Government of India, is very clear that all agencies would act in unison and not in silos to track GST evasion. For fake invoices also, they have specified and amended various Rule 21A, Rule 10A, etc., Section 10A, etc., wherein PAN link bank account needs to be linked to the GST portal also. Otherwise, there is a chance that your GSTIN would be suspended. So trade readiness required. Please revisit all your bank accounts which are disclosed in the GST. If they are not PAN linked, please disclose PAN linked bank accounts immediately, because there is a chance that your GST might be suspended. Although after suspension, if you link it, then it would be revoked. But we all know to get a GST revoked, it is a task. Now, I will share with you a case which has happened, a very interesting one. One of my clients, they were having some repair work, furniture repair in one of the offices, and they shifted close by. But they forgot to remove it from the place of business in the GST portal. And during that time, there was a visit by the GST officers and there was a big mess. Friends, under Rule 9 and Rule 25, kindly listen to this very carefully, very important. Under Rule 9 and Rule 25, a shelter can be taken that a physical verification can happen only in the presence of the taxpayer in case of GST registration or post that. Now that would be amended. Even if the taxpayer is not available, the visit can happen, and if the taxpayer is not found, then the GST can be suspended. If you are newly applying, it cannot be granted registration and action can happen accordingly. So this is completely against the demand of virtual place of business by e-commerce operators. And I see some e-commerce operators are here. So friends, virtual place of business is still some distance away in GST law, but wherever you do have a satellite place of business, please ensure you have one person situated in those place of business. Otherwise, issues might occur. I am aware that in some states there are representations and some states have been even accepted in some form this virtual place of business theory. But the circulars and instructions need to be issued accordingly. Okay. There is going to be more data analytics to track the entire supply chain. So we keep on deliberating in High Court. We have won many cases where second level, third level suppliers were investigated and thereafter ITC was denied to the third level, second level recipient. Now that may further be invoked and powers are delegated accordingly. TCS, there is some relaxation for the invoicing where the final recipients only state code and state name needs to be put and the entire address need not be put. And just like in income tax under section 194O, clarification had come that where multiple e-commerce operators are there, there would not be multiple TDS under 194O. Similarly for TCS also in case of multiple e-commerce operators, possibly a similar circular would come that there would not be multiple TCSs also for e-commerce operators under GST. Invoicing and e-way bill. Okay, now this is again very important for all of you. Generally, many of the state government, central government departments, sometimes PSUs also, they are supplying exempt outward goods or services under a notification or special exemption is there. They do not take normal GST numbers, right? Very critical. However, they have PIN numbers. GST, TDS numbers. Friends, now this GST TDS number of your customer or recipient who is a government, PSU, etc., that needs to be put in and e-invoice generated. Very, very critical. Very, that there are still, advanced rulings happening in the state of West Bengal, wherein where the rice, the wheat millers are supplying to the state government foods department without GST, they have to also generate e-invoices subject to conditions. So please be aware and please act accordingly for others also. Now you need to weed out as to who is a government or PSU or local authority, and for those you need to generate e-invoices and not B2C invoices. Otherwise, there can be a penalty per invoice of rupees 50,000 rupees. For movement of gold, e-invoice, e-way bill requirement would be as per the decision of each state. Again, a very important decision that for group companies, holding company investing in subsidiary, that would not be considered to be as a service, and rightly so, because it is just a sale and purchase of securities. But the council has not clarified on corporate guarantees, which is also an issue today in the corporate world. So while this is a welcome step, but corporate guarantees may require to be clarified also. Transitional appeals for interest that can be done manually. Amnesty scheme would go on. Tobacco and pan masala, the machines as per the council recommendation would need to be registered. The modus operandi would come in. Now this you can go through your own pace. There are other clarifications which would be coming in. For example, in case of duty-free shops in the airports, Whether that was exempt supply or no supply, that was a contention. Now they have clarified it would be exempt supply and proportionate ITC reversal would require to be done. State level coordination committees already they are there, where CGST, SGST officers would keep on interacting. Possibly chambers would be involved. Erstwhile in period, earlier chambers have been involved, and possibly when there are state level coordination committee meetings, then stakeholder and taxpayers issues would also be discussed in that. This is again a welcome move. There are certain amendments in GST rates. You can go through this at your pace. We have already discussed this food and beverage part, right? So I think this rates part you can go through at your own pace. So friends, I think we have covered all of the recommendations which are critical as per the GST Council meeting, which was held yesterday. We would take all the questions which are there in the chat box first. Okay, we would go from top to down. Salary of director, Mr. Gyan. Salary of director, Mr. Gyan, I think you were saying salary of director, whether liable to RCM or not. We have clarified that salary of director is not liable to RCM under serial number 6 of 13/2017 CGST rate. Okay, ITC availed and reversed in the same month's return. Is that penalty applicable for ITC ineligible claimed ITC? Well, if you avail and reverse in the same month's GSTR 3B, then why do you want to disclose it at all? Right? But somewhere if you are talking about this circular 170 where you avail and then reverse it as a permanent reversal, then of course no interest is leviable, no question of penalty at all. Mr. Yadav says, please explain about ISD registration to requirement after GST Council recommendation. So GST Council, so it seems the circular would make it more clear, but it seems that for third party services received common for all the registration, for example, I discussed statutory auditor's fees, the GST which the statutory auditor charges, and if he bills to the HO, then it is cross-charged in the earlier periods, that would be regularized. But henceforth, I think it would be recommended that because in case these kind of services are common to all the branches, this should be routed through ISD. Even in case you take it in the HO, the supplier bills you in your HO registration, wide rule 54(1)A, you take it into ISD and thereafter distribute it rather than cross-charging it. Okay, Mr. Ramesh is saying, can we file refund now for exporters when realized amount received after 1 year? The taxpayer can now file refund on realization. Kindly clarify. Well, if you are not under the 2 years time barring period, you can file. Mr. Nayak says DGGI started sending notices after Tata Motors judgment on warranty replacement. Whether we should wait for the notification of this GST Council before replying, you must reply on the basis of the GST press release, and post the circular, you can give a detailed reply. However, in the PPT, we have discussed there is an advance ruling, and we have discussed in detail the defenses which must be taken in case of warranty supply. You can take the defenses from our PPT, which would be shared, and reply accordingly. But this council recommendation and press release comes as a breather, and you can do an interim reply as per the recommendations itself. Mr. Gyan says, if I take RCM service invoice into ISD registration, how can I pay tax? As I explained, Rule 54, Sub Rule 1, capital A. Through that, you can bill from your normal registration to ISD in the same state and thereafter distribute it. Okay, you would be getting Mr. Rajesh Patak. What would be the change in compensation cess rates? Compensation cess rates, we have it in our PPT on this pan parag, etc. That would be shared. Okay, for interest calculation, in case of CGST liability, whether ECL as a whole needs to be considered. Yes, very important question. They have clarified only in case of IGST, but the analogy should be applied to CGST. However, be very careful. You have to demonstrate that this was due to a GSTIN, GST network functionality and not as per the GST law. Also wait for the circular to come before contesting this issue. Mr. Ramanujan says, since it is now clarified ISD is not mandatory to transfer ITC, will it resolve the dispute on the change made through cross-charge mechanism in such cases? On the charge made through cross-charge? Yes. As I explained, all the notices should be put into rest. Also, as per the banking FAQ, it was clarified even earlier also that cross-charge can be an alternative to ISD. Mr. Sunil Nath says, if there is balance in the cash ledger, should I pay interest in case of ITC reversal? See, we have discussed not in this presentation, but in earlier colloquiums. You can go through our YouTube channel. In that, we have discussed that Rule 61(2) clarifies that filing of 3B is a mere discharge of liability. Now, if you have cash ledger balance and you have utilized the ITC exhausted, then you can contest on Pratibha Processor's Supreme Court judgment, where it was clarified that interest is only compensatory in nature. So accordingly, you can contest. However, this is not clarified as of now in the council meeting press release. Yeah, again, you have said that clarified when GST 3B filing is late. I have clarified already. If we take CGST, SGST, ITC as a clerical error, is interest applicable in case you have utilized, and as a whole in the IGST, in the balance ITC ledger, you do not have the sufficient ITC. So ITC only availed and utilized, that would be not chargeable to interest, otherwise it would be liable to interest. Mr. Banka says, would GST on sale of metal scrap under forward charge would continue or not? If not, whether ITC has to be reversed? Yes, as of now, there is only a discussion which has happened. No recommendation, also no decision. That is far away. As of now, scrap is under forward charge. Mr. Shirshad says GSTR 1 not filed with the due date by the supplier, then ITC claimed by recipient is to be reversed. If not reversed, then can we go with the appeal after order of reversal, or in appeal also same ITC availed to be reversed? I think your question is that in case supplier has not filed his GSTR 1 and you have taken your ITC, and after some time he files his GSTR 1 and 3B. I have already discussed this in the earlier colloquiums. You can go through our YouTube channel. That Rule 37 capital A, notified from 26th of December 2022, clarifies that there would not be any dual interest. In case your supplier has paid interest on this amount, you need not pay interest on the same amount. Regarding the fact that this 2B non-compliance as per section 16(2)AA, then of course a penalty, general penalty can be applicable. Interest should not be applicable to you as a recipient just because supplier has not filed his GSTR 1. So 37 capital A can come to your rescue. Ms. Veena says in case of renting of residential dwelling for commercial purposes by unregistered person to registered person, will RCM be applicable? Purpose is important. Ms. Reena, if the purpose is commercial and it can be proved with evidence, then no RCM would apply. Mr. Gyan says, can I take invoice in normal registration and pay my RCM there and tax invoice issued under ISD under cross charge? I have already clarified, no, you cannot do, have to go through ISD and the process under Rule 54 sub rule 1 capital A needs to be followed. Mr. Nayak says we used to add project sites at additional place of business. Sometimes our people may not be available at project site. Is it required to be present at site to attend GST people for address verification? Mr. Nayak, this is precisely what I was telling. Yes, after this amendment to Rule 3, 9 and 25, possibly this is the one of the things which is going to happen. If your people are not present on sites, ensure that you have the customer's person who is authorized to attend to the GST people when they visit the sites. Very, very careful, Mr. Nayak, on this ground. Please act accordingly. All the work contractors over here, they need to be careful regarding these sites, right? In fact, many of the e-commerce operators also, they have warehouses, etc. as APOBs. Please be a little careful. Have somebody authorized over there who can be made available in case of visit by the GST field officers. Okay, Mr. Munir said for financial year 1920 and 2021, my clients had paid for non-reflection of ITC. Can now refund be claimed for that payment? My clients had paid for non-reflection of ITC. Oh, so ITC was not reflected. Now it is reflected. Refund is, can be paid or not. Yes, the refund is applicable in this case. There cannot be an excess collection of GST. In fact, you can take the shelter under Tamil Nadu High Court judgment in the case of Pinstar Automotive, wherein it was said that this is just a protective collection of duty, and once the GST is paid by the supplier, then the refund should be applicable. However, you have to see whether this 2 years time frame for claiming refund, that is not exhausted, and the refund from the date of payment where you have made the payment, that is not time barred. Mr. Nagarajan says warranty replacement clarity is retrospective effect. We need to wait, Mr. Nagarajan. We need to wait. Let the clarity, the circular come. But yes, what it seems that the principle of warranty, that is retrospective, right? The process that for that circular will clarify. Okay, Mr. Ramanujan says state-wise P&L balance sheet mandatory. Yes. Section 71, it talks about state-wise profit and loss account or certain other statement, right? But state-wise, you have to prepare some trial balance, profit and loss account, whatever the case might be. Mr. Panda says if rented premise residential house is for employee use and not for business, so the GST under RCM is eligible or ineligible. In my legal submission, it is eligible because it is business purpose. It cannot be called personal purpose. If the employee doesn't stay, how will he do service? We have already reversed ITC mismatches 2021. Can we claim refund under the shelter of Circular 183? Yes. Only it should not be time barred. 2 years should not have passed after payment of such ITC. I think it is not. It is not time barred as of now, because 2021 you would have paid in the last year itself. Mr. Munil says, please again state the case law of Tamil Nadu High Court, Pinstar Automotive. I am a transporter. Okay, last question. We have already exceeded 15 minutes. I am a transporter. I am registered at Gurgaon and I have office at Delhi. But all invoices issued from Gurgaon. So we need to take registration in Delhi or not. Mr. Gyan, this I have discussed in many forums. If you see the definition of fixed establishment and read with section 25, it is very clear that you have to take registration in Delhi. If you have some establishment and from Delhi you are providing certain services, that is in case you have some people who are in Delhi, etc. But if you do not have anything in Delhi, you are just providing the services, your vehicle is going, coming back, then you need not take registration. Because Gurgaon and Delhi, they are so close by, I think you can relook. But in case you have taken an office in Delhi, then no relaxation. Please take a registration in Delhi. Mr. Surya Tej says his interest calculation as per 53 retrospective in nature. Yes, should be retrospective in nature because it is a clarification. Mr. Panda says refund of 2A or 3B is to be considered as it is not clear in same ground as in case of 3B. For refund of 2A or 3B or 2B is to be considered. Oh, so for refund, whether 2A or 2B is to be considered. 2B after 1st of January 2022. So, thank you very much to all the participants for joining. Thank you, Team Tax Connect, for holding this webinar at such a short notice, and even Samir from VILGST. Thank you very much for partnering with us. Thank you all the participants, and we look forward to your participation in the upcoming webinars. Thank you very much.
Thank you.
Thank you, Vivek. Thank you. We might reconnect when we have the notifications and circular issued by the CBIC, because whatever we have done today is on the basis of the press release and whatever was said by the Honorable Finance Minister yesterday in press conference. So we'll have a much better understanding once we have the circulars and the notification issued by the department. That time we'll again reconnect and try to have your views, Vivek, on. Till then, thanks a lot. Thank you so much for joining us, and have a good day. Thank you, everyone.
Sure.
Thank you.
Thank you so much.
Thank you so much.